Stories. Eamon Javers looking at how the deal came together. Megan Cassella has Treasury Secretary Janet Yellen's stance on AI regulation. Steve Kovach is here with what it means for the companies involved. And Deirdre Bosa is in San Francisco with the Silicon Valley reaction. Eamon, let's start with you. Set it up for us.
Hey there, Tyler. Multiple sources familiar confirmed to CNBC that the Department of Justice and the Federal Trade Commission are in now the final stages of a deal to divide up antitrust inquiries into NVIDIA, Microsoft, and OpenAI, several of the most dominant players in the rapidly emerging AI space. The deal was first reported by the New York Times this morning. It largely covers investigations into the behavior of the companies, I'm told, not necessarily the mergers and acquisitions by the companies. I'm also told that the Department of Justice will look at Taiwanese chipmaker TSMC in any upcoming investigation if it comes. That's according to a source familiar with the matter, because TSMC has operations in the United States. It comes under the Department of Justice's jurisdiction, even though it's based in Taiwan. Now, that signals that the U.S. government investigative effort will be focused on the hardware and chip piece of the industry, as well as the software and large language model side of the industry. So, according to the terms under discussion in this deal, DOJ will take the lead on investigating whether NVIDIA has violated any antitrust laws, and the FTC will lead examinations of OpenAI and Microsoft. Now, what's still unknown in all this is what evidence, if any, the federal government would be able to produce to suggest any violations of the law. All of that work still a long way off at this point. This is dividing up the turf here between the regulators and the law enforcement side. Guys,
in the case of NVIDIA, I mean, I guess they would defend themselves by saying, well, we just had a better product.
Yeah, I mean, that's the typical defense in antitrust cases. We got to the top because we're the best, and you're penalizing us for being so good at what we do. What the government will look at here is anti-competitive behaviors designed to block or squash competitors along the way to getting to that dominant position. Sometimes with discovery and all the investigative tools they have, they can pull out some embarrassing detailed emails, contracts, that kind of thing that go back to some alleged crimes. But we have to wait. That is all very, very far down the line. We have to wait for any investigation and then any evidence that that might present.
All right. Thanks very much. Eamon Javers reporting.
Treasury Secretary Yellen is also weighing in on the AI regulation debate. Megan Cassella has those details. Megan.
Kelly, Treasury Secretary Yellen is warning about what she calls significant risks associated with the use of AI by financial companies. So in remarks just a few minutes ago, Yellen was talking really in detail for the first time about what she sees as vulnerabilities stemming from using AI in finance. She says while there are tremendous opportunities with AI in the financial sector, she worries about risks in a few different areas. She listed concerns around too much concentration among key players, on the complexity of AI models, on inadequate risk management frameworks, and on the idea that insufficient or faulty data could lead to bias in AI-driven decision-making. Yellen also said that Treasury is in regular communication with federal financial regulators on AI, and she highlighted that the agency just this morning began asking the financial services sector for its input on uses and risks of AI in the industry. It's a formal request for information, and it marks the first step toward regulation around AI in finance. The agency says part of what it's looking for here are recommendations on how rules around the use of AI in finance could be made stronger. And guys, that's really only the very first step in a very long regulatory process. But with so little action in Congress surrounding AI right now, federal regulation like this is the most likely way that Washington will begin to rein in the use of AI.
Megan, what is she pointing to when she says, in your paraphrase, I suppose, that AI could be used to produce decisions that are unfair or biased? What is she pointing at there?
She's looking at things like approving a loan, for example, or deciding who might have access to a bigger credit line. These are the kinds of things that banks and other financial institutions could start to use AI for. They might be screening applicants. And she worries that, I think her wording was that it could either perpetuate or introduce new biases. So I think the Treasury Department in an ideal world would love to know, what are they basing those models on? What are they using to train them? She wants to ensure that they're not perpetuating, like she says, or introducing any sorts of new biases that could make it less of a level playing field, could make it harder for some people to get loans or access to credit.
All right. Megan Cassella, thank you very much. So there's the Washington perspective on these various probes. But what does it all mean for the companies that are being discussed here, and potentially their bottom lines? Steve Kovach here with a closer look. It is a real tangle of the A-listers in AI.
Yeah, and not just the A-listers. In Microsoft's case, and NVIDIA's case, the two most valuable companies in the world now. Let's talk about Microsoft, though, because this is what I follow the closest and what we know, this FTC and DOJ, the kind of things they've gone after before. One thing they may be looking at is this deal Microsoft did earlier this spring with a startup called Inflection. They basically hired the entire staff of Inflection, including its CEO, Mustafa Suleyman, made him the CEO of a new group within Microsoft called Microsoft AI. He reports directly to Satya Nadella. That was seen as an acquisition without actually buying the company. They effectively gutted the entire company and left it a shell of what it used to be. Now they say it's still going to operate, it's still going to run in Azure Cloud, and so on and so forth. But at the end of the day, almost no one is working there anymore. They're all Microsoft employees now. So you could definitely see the FTC taking a look at that. There's another thing on the cloud front. Where is Microsoft's advantage in artificial intelligence? It's in the cloud. It's in the Azure cloud service. Its relationship with OpenAI means all of OpenAI's activity has to run in the cloud. On top of that...
On Azure?
On Azure, correct. On top of that, it's making so many deals with so many other companies, other AI startups. A number of them were announced at their Big Build Developers Conference last week. What we've seen this FTC and DOJ do is kind of talk about this bifurcation of an established market. We saw it with the Apple DOJ case, where they said there's a high-end smartphone market that the iPhone plays in, and then there's everyone else the low end. We saw the FTC do it with video games when they were trying to block the Activision-Microsoft deal. They said there's a high-end console market that's Sony and Microsoft, and then there's a low end with the Nintendo and everyone else. Court did not buy that argument. We'll see if they buy the argument for Microsoft. Or with the Apple case, I can totally see them looking at it and say, there's the AI cloud, and then there's the regular cloud. And Microsoft is snapping up all these deals, making these huge investments all over the world, giving themselves an unfair... I'm not saying it's the right argument.
Sure.
I can say, based on what we know from the FTC, this is the kinds of things they'd be looking at.
Here's what I think about, though. Is it illegal to sell your company?
No, of course not.
But if you... So the deal they did with the small startup, which is called Inflection, was done to avoid regulatory scrutiny
because they knew they would get hammered right away.
And we always look at these deals from the buyer side. Well, Microsoft's getting better. Well, what about the company that started up, wants to sell itself for $600 million, what have you? And are they not allowed to sell? Are those employees, are those founders not allowed to cash in on the tremendous value they've created if they decide we want to sell to Microsoft or big tech? This would be a massive success for them or for any similar firm. So I'm just saying, at some point, I understand that they are trying to go this other route in order to get this done, and they did it a different way. But why can't they do what they want to do?
They could try, but it would just come with... Look what they went through with the Activision deal. It was, 20 months of just nonstop back and forth with the FTC?
They as the target, not as Microsoft.
You mean Inflection?
Why can't Inflection do what they want to do? No one's pressure. They can take the money if they want to take the money.
I agree. And they would agree, too. I think they had well over $1 billion valuation. So you add a multiple on top of that. And boy, a couple $1 billion Microsoft would have had to spend to buy that entire company. But they don't want to go through the whole mess, and so they're stuck in this weird point where, okay, we're just going to acquire all the talent and bring them in and do this kind of fake acquisition. Now, Microsoft tells me they believe they're in compliance with all the laws about disclosures to the FTC and so forth with this because, hey, we just hired a bunch of employees. We didn't actually buy the company. The company still exists.
Yeah.
But that's your point, and I think this FTC would rather a company like Inflection just, become public. On the NVIDIA, let's talk about the NVIDIA side of this because NVIDIA tried to buy ARM, if you remember, and that got knocked down. And so the FTC and DOJ can point to that deal, say, we blocked that deal. Now ARM became IPO'd on its own. It was a very successful IPO. It brought this new player to the market, so on and so forth. That appears to be what these regulators like to see versus what you just described. They'd rather Inflection grow up on its own than get acquired by someone. But again, if they want to sell, they should, maybe, who's to say that they can't sell themselves?
Right.